Hello and welcome to another D-Value video. Today we're taking an in-depth look at Abbott Laboratories, ticker symbol ABT. We'll dive into the financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Abbott Laboratories is an American multinational medical devices and healthcare company. The stock is priced at $116 with a market cap of 204 billion. Now, let's dive into some key valuation metrics. The non-GAAP price to earnings ratio stands at 26.3, the price to cash flow ratio is 25.8, and the median price to earnings over the past 10 years was 37.8. Over the past 5 years, the company's revenue has grown by 25.7%, and its bottom line has increased by 55.2%. In terms of earnings per share, there has been a growth of 58.3%, and notably, the number of common shares outstanding is 1.75 billion, a minus 1.8% change over a period. Now, let's assess the company's liquidity and solvency. The interest coverage ratio is 12.1, indicating the company's solid ability to handle its debt obligations. The quick ratio, a measure of the company's short-term liquidity, is 1.18. This suggests a good short-term liquidity. And additionally, the long-term debt to equity ratio is 0.48 and the total debt to equity ratio is 0.48. That is because they have no short-term borrowings, they only have long-term debt. And I would like to add that 0.38 debt to equity ratio is great from in general, from what I've seen across a spectrum of companies, 0.38 is basically on the low end of debt load. So this is pretty good. Moving on to the cash flow statement. Cash from operations stands at 7.26 billion, reflecting a growth of 18.3%. Cash from investing activities is minus 3.1 billion with a plus 72.6% change. Financing activities are at minus 7.1 billion, showing a plus 65.3% change over the same period. And capex has increased by 34.4%. Free cash flow, most importantly, has grown by 26.4% to 5.4 billion. Moving forward, let's look at metrics to show how well the company is utilizing its resources. The return on equity is 14.3%. The return on investment is 12.4%. The return on assets is 7.6%. And most important, most importantly, the return on invested capital stands at 10.3%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 6.5% for 10 years, and perpetuity growth rate of 2%, we get a fair value of $79.4. Secondly, using a multiples valuation of 20 times earnings, operating cash flow, and 25 times free cash flow, we get a fair value of $78.7. Thirdly, the analyst target price is $129. Putting it all together, we get an intrinsic value of $95.7. And using a 15% margin of safety, we get an acceptable buy price of $81.3, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate Abbott Laboratories as a whole. Now, personally, I believe that although the stock is pretty overvalued, from many points of view. This is still a hold because of their great balance sheet, their great management, and their at least from what I've seen from their expectations in the next 2 and 3 years. So they'll continue this growth that they have. Of course, this is not huge growth, but they'll continue this sort of 5 to 10% per annum growth, which is for this good balance sheet, for this growth rate, and for their moat, I believe that they deserve a slight premium. And so I believe that they're a hold for now. But if they grow above 125 this year or 130, I think there will be a sell because that would be enough to take in some profits. Uh, and as for a buy, I believe that although they're a great company, there is no point in paying that much of a premium when buying because price is everything, and 5 to 10% growth per annum is not really that good to motivate a high buying price. And of course, if you bought in at 70, that's great, but now it's not the best time to buy, for at least in my opinion. So as a long-term investor, I think this would be a great buy at under like 90, under 85. If you could get it under 80, that would be great, but I don't know if you'll ever reach 80 again if they continue growing. And yeah, so let's settle on sub 85 levels for a buy. Now, thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.